Hey, everybody, it's your favorite host, Marcus Norman of Gentleman Style Podcast Show. Today, we are interviewing the man, the myth, the legend himself. We're going to talk about investing and venture capital. Today, y'all notice I'm wearing my African dashiki in honor of Black History Month. So I'm black, surprising, surprise. But anyway, this man we're going to bring to the stage is huge. And he's going to teach us and talk about some new technology, some new investment strategies that is coming to the market. You won't want to miss 1 second of this man's story. He is powerful. Stay tuned. Stay with us. Here we go. Welcome back to the Gentleman Style Podcast stage. My name is Marcus, your favorite gentleman, and I have coming to the stage Mr. Ryan Collison, who has sold 2 startups, not 1, not 2 startups in the healthcare space and led over $250 million in healthcare M&A transactions. And he has also demonstrated a vision for growth as a CEO of 2 highly successful companies. There's a theme here with the number of 2 with this man. His latest venture that we're going to get into is some new investments and new projects that he's working in the blockchain space in Web3 investing with the launch of his venture capital firm, Notebook Capital. So help me welcome to the stage the incredible Mr. Ryan Collison.
Thank you.
Welcome, Mr. Ryan, sir. Glad to have you to the Gentleman Style Podcast Show. Brother, you are phenomenal, and this is big. You're doing 2 major things, but I want to dive in. I want to ask you, what is your story? How did you end up in the CEO, founder, venture capital space? What led your journey?
So that started in the most unlikeliest of ways, to be honest. So I grew up in Baltimore. I am a textbook opiate epidemic, Baltimore, The Wire, all this stuff you see with that. So I was in college. I failed out of college due to my drug addiction. I had to go get sober, go get some help. As part of that, I moved to South Florida, where, at that time, that's where, people with problems went. And I found myself living in a halfway house. When you're down there, the interesting thing is every business in the area knows the address to the halfway house, and you can't get a job. So you got kind of 2 opportunities. You can either go work in a phone room or you can go work in somebody else's treatment center. So I ended up in a phone room, worked real hard, got an insurance license, had a good little living for myself that I was making. And then 2008 hit. And selling insurance just was not going to pay the bills. I had a friend of mine who worked for a company that did third-party work for drug and alcohol treatment centers. And literally just the fact that I knew what a deductible was and how to do the math on one got me the job doing admissions. Long story short, I worked my way up through there. I had a job that was getting authorizations for patients that were coming into treatment. And one day my boss asked me to reconcile some of the insurance billing. And when the bookkeeper handed me the stack of documents that I needed, she left the billing company's invoice in the stack. And I almost fell out of my chair when I saw what they got paid. And then a light bulb went off because I knew that I dealt with an $8 an hour employee on the other side of the email who was not very bright. So my first thing was I went to my boss and I'm like, hey, man, I can really learn this. Like, I can do this. What she's doing is not that hard. It's medical billing, it's coding, it's standardized. Like, give me a couple weeks. Let me just focus on this and I can build out this department for you. And at the time, he's been a great mentor to me over the years. He just passed recently. He was like, no, we can't mess with the billing company. The billing company is, a thing that nobody can figure out. You can't figure it out. So I went and figured it out. And 2 weeks later, I was back in his office and I said, hey, remember that thing with the billing I told you about? He's like, yeah, I told you we're not going to do that. I was like, yeah, I'm not asking you anymore. I'm putting in my 2 weeks. I'm gonna go give this thing a shot. And I got 2 friends that worked in other treatment centers, and we got some clients just to give us a shot. I was literally borrowing money from one of my friends who worked at one of my clients because he knew that I was good for it because his boss was going to pay me eventually, just to pay the bills. I had gotten a tax return, so I had a 9-month-old daughter at the house, and I had just gotten a couple $1,000s back on my tax return from the previous year, and I kind of like looked at the check in my hand, and I knew like either this is going to go away little by little on Pampers and doctor visits and brake pads, or like I can make a move right now and try to do something different. But I'm living paycheck to paycheck anyway, so what do I have to lose? And I took the shot. I stepped out to start my own business, and it turned out to be wildly successful. So that was 2011. We grew that to servicing over 150 drug and alcohol treatment centers in about 25 states. And we started the process of selling that in 2014. And it kind of gotten to the point, and I've learned this about myself in the ensuing years. I really like starting a business. I am not the best person to run it once it's at scale and day to day, and there's 100 minute management details. That does not fit my strength. I'm much better when like the phone and the desk are on the floor and we just have to figure something out. So it had kind of grown past my ability to manage it. So we hired an investment bank. They took it out to market. I had one number that I thought we were getting, a range, and 2 large private equity firms kind of got into, a back and forth, and we got 3 times what we thought we were going to get. And that was my first experience, with my first business. And now we can kind of come back to that later. But that success also gave me a couple wrong and incorrect messages about the world and how business works, because later ventures, I kind of suffered from the delusion that it was going to go like that every time I touched anything. And you can't be more wrong about that.
Right. So what's the strategy? I understand you mentioned that you're very good at starting a business, but the day-to-day, once it's up to a certain level, what's the strategy behind selling a business? What should people consider? Because I know a lot of people, they start business and they always talk about legacy. I'm going to keep this business. It's going to stay. I'm going to be the Henry Ford of 2022. People always talk about keeping a business. What was the strategy behind, if any? What should people consider when selling a business, if at all?
I mean, there's a couple considerations there. A lot of it's kind of deeply personal. Like,
Gotcha.
I view businesses as a means to an end. Just from my background, it's never been about like being the CEO for me. It's more about being creative and doing new things is my more driving motivator. So once the business is kind of systematized, I personally lose interest. And I'd rather have my head in a book learning about the next thing. So that's my personal disposition. There's also some calculus that comes depending on market conditions, and this takes a while to learn about. But if they're going to give you 10 times your yearly profit, and you sit down and you take an honest look at your business and you say, I don't think I can keep this up at this rate or higher for 10 years, then the math becomes kind of obvious that, selling is a better deal. Another thing that I kind of learned about is a lot of these bigger private equity companies or bigger, companies that do acquisitions, they're trading off of multiples of either a public market or what the next guy is going to pay that's in the public market. So a lot of times you can get a lot more for your business than you really expect, because in a lot of ways, it's just, you mark it up and sell it to the next guy, and they're going to mark it up and sell it to the next guy. So you really got to kind of do that math for yourself.
Makes sense.
And one thing I would add to any business owner is make sure you hire somebody like an investment banker or a professional. The analogy I use is, I'm like a general contractor. I know how to build the thing, but selling a thing, I would, if it was a house, I would still hire a real estate agent. And, I know the difference in my skill set. And, you're always going to do better selling your house with an agent than you are, to your buddy down the street. Business is no different. You need the right people at the table to help you make that transaction.
You debunk something for me. Growing up, I always heard I gotta go to college. You gotta get a college degree in order to be successful in life. But you're living proof that is not necessary. What are your thoughts around? That's how I feel about just your story. What are your thoughts around? Do I need today in 2022? Do I need college to be successful in life?
The short answer is no, but there's some nuance there. So the first time I dropped out was because I was a total screw up. The second time I tried to go to school, I had already had my billing company going, and I'm paying good money to sit in classes where they're telling me what an LLC is. And I just decided, this isn't really a good investment of my time or money at this point. I would say that it depends on what you want to do. Obviously, if you want to be a doctor or an engineer or something that's technical that requires a degree or a certification, by all means, go to school for that. But for a lot of people, not all people, I want to be clear, I'm not, I don't want moms calling me that I'm giving their kid bad information. But for me, I found that if I find an area that I'm passionate about and interested in, that I can teach myself about the thing and I can kind of self-learn better than, following a school curriculum. And, the one thing I always want to make sure to be clear about is that when I say, entrepreneurs or different people don't need college, that's specific to, they don't need to attend an institution that tells them what books to read and pay them money to do that. That is not at all saying that you don't need to be proactively educating yourself and learning and acquiring knowledge. And I think a lot of young people get sent to college because they don't know what they want to do and they haven't found that passion yet. And I think in a lot of cases, once they find that, you don't need a teacher and a grade pushing you to do that thing. You'll do that on your own. I think the more important thing is finding the thing that gets you excited. I've seen it over and over again with entrepreneurs. They might just kind of bounce around not doing a lot, and then they find the thing that like captures their imagination, and then your own motivation will take you pretty far on that.
Makes sense. What is the psychological journey that you went through when you came into money, when you realized that you 10x'd your initial investment? You started with your tax refund, which is that's funny because we are in a tax season right now, right? So what are the things when founding a company? Because you started Notebook Capital, two venture capital companies, and one of them is Notebook Capital. What are the thought process of being a founder, that journey that you go through on a daily basis?
So in the early stages, I have to be honest to admit that once you start having success, it becomes pretty easy to become a not pleasant person. Especially coming from like the background I came from. If you didn't come, from money or from knowing people with money, it goes to your head. And, honestly, I haven't found a way around that. It's just part of the maturing process. Hopefully you have good people in your life that can kind of pull you out of that a little bit. But like I mentioned earlier, you get your success and then you get this degree of hubris that I'm always going to be successful and everything's always going to work out for me. and you start to really not look at risk in the same way that you did before. And, you start to make mistakes. I mean, you see it all the time. You see it with, athletes that think they're the best, and then they slack off on their training program and they come back the next season and it's just not the same. I think that's a basic, human response to success. And, for me, I had to, go do a few things and fail and kind of return to some of that humility. And, that can be an outcome process. That can be, I've seen it have ugly outcomes. I've seen people, have that moment and then reel themselves back in real quick. But it's definitely a thing that nobody talks about. Another thing that nobody talks about when you're a founder is that it can be profoundly lonely. You're surrounded all day by people that work for you, but they're not, as much as you might be friendly with them, they're not necessarily your peers. They're not necessarily dealing with the same struggles or have the same weight on their shoulder. So it's very important to kind of get a network of people who've been there, done that, or are doing that. So you can bounce things off people like, hey, I'm feeling a little crazy about this thing in my business today. Like, is this normal? Have you ever felt like that? And then one last thing I'll add, that was important for my journey is when I sold my first business and when I sold my second business, there was a profound sense of like grief and loss with that, that nobody told me was coming. So I had built this business. I had, 50, 60 employees I saw every day. And, basically one day somebody gave me a big bag of money and said, don't come around here anymore. And all the folks that I'd been in the trenches with and that I had spent years with, they kept going to the office and I was at home with no real direction. And like, I felt sad. And then I tried to talk to people about it and they'd be like, well, what are you sad for? You have all this money. And, money doesn't really replace a sense of purpose or direction. So that would be another, tip I would give to founders when you're preparing to sell is you need to prepare your life for after you sell, because there definitely is a really big come down when you do that, that I wasn't ready for. And, if somebody would have told me, I would have done a few things differently.
So there needs to be an exit strategy. There needs to be a plan for when you exit your company. Yeah, you watched your baby grow up. Yeah.
For you personally, like you need to like take care of yourself during that time, because you think I just got all this money and I'm good, but that's not all your basic human needs. You also just took away everything you do all day. And idle hands. Idle hands are idle hands, especially with a nice paycheck.
Very true. Very true. Mr. Ryan Collison, y'all. We are going to go to a quick commercial break. Don't go anywhere. Stay tuned. Stay with us. We'll be right back.
Good day, podcast listeners. This is your boy, Marcus Norman of Gentleman Style Podcast Show. I wanted to let you guys know that we will be rolling out a new feature and adding a join sponsor button next to the subscriber button here at the bottom of your screen. Once you click the button, it will display 3 membership levels. Gentleman Gentry, which is our entry level. Duke Duchess, which is our season level, and the Emperor and Empress, which is our most sophisticated level, which you will receive unique perks and benefits at each differing level and gain access to our community tab. We will also be sharing polls, upcoming events, and interviews, as well as receive feedback from our sponsors directly. Your support helps me find new and exciting guests to bring to the stage live. Well, in order to get the higher end speakers, it requires, you guessed it, money. So thank you for tuning in to my channel. And if becoming a sponsor sounds good to you, then select the join button below and choose your desired sponsor level. Let's continue to grow and serve the future of generations of men and women to come. Love you guys. Bye.
We are back to the Gentleman Style Podcast Show, and we have Mr. Ryan Collison. 2 times venture capitalist, CEO, founder with an incredible story to boot. Dropped out of college, this man turned his life completely around. Suffered from drug addictions, but got better, got on the right track, and now he's doing major things. And sold 2 startups, and now he started a company called Notebook Capital. Mr. Ryan, tell us what Notebook Capital does today. What is that? What's that like for you?
So Notebook Capital is my new venture. It's focused on the crypto Web3 space. I have some other holding companies that do, other more traditional, direct investment. And, just for all the legal and tax purposes, I needed my own vehicle to do the Web3 and the crypto stuff. And I've just been fascinated with the space. I've been doing it as a hobby for about a year or two. And over this past couple of months, I decided, I really want to kind of like dive in deep. So Notebook Capital is the vehicle that I'm going to be doing that through. We've already started, gotten a couple early investments, kind of getting our feet under us. The Web3 space is its own whole new culture, whole new rules of the road, whole new sets of norms. And it's really been a fun learning experience since we kind of dove in.
So the crypto space, that crypto, although isn't very new, it's growing as the new venture capitalist, is growing as a new investment product. How does Notebook Capital, how do you evaluate a good deal? What makes a good investment deal for you to put money into? How do you evaluate that?
Well, so the basics don't necessarily change. There's some new nuances because it's crypto and it's Web3, but to start with the basics, you have to have your own thesis on what you think is going to happen in the space, and you have to look for deals that match up with that. Another thing, just for an early investor or a founder, don't invest in your homeboys' businesses, your mother's friend's son. You have to kind of make sure you're sourcing them through your network properly, because the personal entanglements will wreck you. Another thing as a founder is you have to really evaluate the team running the business, because a mistake that I've made more than once is seeing somebody else's business plan, imagining myself in the CEO role and saying, I could do that. But that's not the question when you're making an investment. The question is the person bringing me the deal, can they do that? And that's a really different set of evaluations that you need to make. As when you kind of switch from founder to investor, it's like, I'm not the quarterback on that deal. He's not always going to see the passes and the plays that I see, and I need to, he needs to have his own skill set. So you bring all that into the Web3 space, and then there's a whole ton of other stuff happening in Web3. It's really like, venture capital on speed. I mean, it's fast. There's a lot going on in the space. It's competitive. These guys, these founders, they're not suffering for lack of capital. So if you think you're just going to come in with money and impress, some of these developers who are working on projects, like, you couldn't be more wrong. You need to, as an investor, have something tangible to offer them that helps their product. Usually they're looking for a network effect. They're looking for, bringing users on with you. It's never just the money, it seems, in the Web3 space, because the space is so flooded with capital. So you need to really have something that you're offering to your startups to kind of differentiate yourself, to even kind of get taken seriously. I was a little taken aback by that. The first couple, mind you, you're dealing with like 19 and 20-year-olds, and they just don't play by the norms and etiquettes that, like, I'm used to playing by. And if they're not interested, they just won't call you back, and they won't tell you why. And you're like, wow, these kids are rude. But then when you dig into it, they're on Discord, they're talking to 150 people all across the globe. Like, unless you're bringing something to the table, the space moves too fast and nobody has time for that. Getting back to your question about what to evaluate, One thing is the tech. Is the team? Does the team have a developer? There's a lot of people that can put together a nice deck and use a lot of fancy buzzwords. That doesn't mean that the product underlying it is going to be successful. So again, you got to really evaluate the team, make sure they're competent. And then in crypto specifically, you have to look at the token economics, because that can really make or break a deal, and that can either show you that they're really operating in good faith, or that could show you a lot of red flags, as far as whether it's a Ponzi or a scam, or these guys are going to take it out to the market and just dump these tokens for a quick cash grab, because that still does happen in this space kind of very frequently.
Right. So don't invest with buddies, don't invest with friends, right? Don't, just because your buddy has a good idea. And you said something that really stuck out to me. I oftentimes, when approached, I put myself, just like you said, I put myself like, okay, this is a good business because I would run it this way. But so what you're saying is, when you invest in a business, when you invest in any investment, things to consider are, make sure that so you don't invest to join partnerships. You don't invest to say, well, I want to work in this business. You're strictly an investor and you're hands off of your investments.
If that's the deal, that I'm a partner in the business, that's a different animal. But when I'm evaluating, being a passive investor, you really got to make sure, because if I wanted to run the business, I'd just start the business. That would defeat the purpose of investing in the business. And I only know this because I've done it. I've made the mistake time and time again where like I thought like, they could have done that because I could have done that. And, so you really got to make sure that they're going to go in and execute. I'm there for advice and guidance. I invest in you, or if I don't invest in you and you just want to call and pick my brain about business or what you should do, like I love having those conversations. But at the end of the day, if I'm investing in your business, you're the one that has to go in there every day and make the hard decisions and, see when something's working, see when something's not working. I can't be available 40 hours a week to be your eyes and ears and like make you a puppet and tell you how to run your business. So yeah, we both have things that we bring to the table in that relationship.
What should someone bring to you that wants to they want your investment, they need your capital, they need your help, maybe not, and that passive nature, hey, I need capital for my business. What should someone have beforehand before bringing something to you as an investor?
That's a good question. One thing you should not do is just message me off LinkedIn and I don't know you. Let me just say that very clearly.
Let me delete my message.
The amount of just spam from strangers I get on LinkedIn is insane. And like, I'm not going to do that. So, unfortunately, especially for a lot of people that are new, like a cold referral isn't going to get the job done. I mean, you could grind that. I don't know that it's effective. So you want to start, you need to be brought to an investor by somebody in your network that they know that can kind of vouch for you. There is that personal element of trust that kind of needs to be there. You need to have a realistic idea of what it is you're doing. You need to have kind of a path to revenue, at least for me. There's a lot of Silicon Valley type startup deals where like they're not even like thinking about money for 3 to 5 years, and there's plenty of firms that invest in that model. That's not really my thing. I'm a little more traditional in that sense. Like you need to have a way to pay the bills after the runway runs out on the initial investment. If you hadn't thought through that, like probably not going to be a great fit. And you got to be ready to go. One thing I've lost a lot of time doing is talking to people who have good business ideas, but they want to do the thing part-time and keep their full-time job. And you don't get to have both as an entrepreneur. You don't get to have security and all the upside. If you're not going to jump into the deep end of the pool with the rest of us, like you're just not going to get there. And you need to call me when you're ready for that. I've had a ton of people, and I think they would be excellent entrepreneurs, and they have had excellent ideas, but they're not ready to leave that full-time job, that security. They're not ready to take on that risk. And, in this world, you can't really serve two masters. So, you need to pick one or the other. And if you're not going to be decisive about that, you're not going to be decisive later when it matters in your business. So I really want to see that level of you're ready to go. You're driving the conversation. It's not me saying, come on. Those situations never work out good for me.
So it's a bad thing then. It's a bad thing if I come to you and I say, well, I need your capital to take this business to the next level, but I also want to hold on to my part-time or maybe even full-time job. That's a bad deal because it doesn't.
A part-time job, you're paying the bills is a different thing. But I'm not ready to make a clean break and walk from my career and do what I got to do to make this business work. That's a bad sign. You're not gonna part-time your business. Like if you need a part-time and you need to do something on the side to pay your bills, I get that. And ideally, when you make your investment plan, I don't believe in this thesis that founders are supposed to work for free and not pay yourself for 2 years. That's ridiculous, unless, you're a rich kid for money. I don't know how anybody even makes that work in the first place because we all got bills. We all got rent. So ideally in your business plan, you factor in, how you live. Like that's an important part. I don't mind adding to that if that's part of the budget because I want you living relatively, knowing how you're going to eat tomorrow, or you're not going to be running your business really well. But you do need to be ready to take the leap. You can't half step it as an entrepreneur.
For sure.
Now, plenty of people start something part-time in their garage while they're working a job, and that's a good way to get going. But when you get to the stage where you're ready to take my capital, you need to be ready to go full-time.
Yes, sir. Yes, sir. We have, on that note, we have one short, quick commercial break. Stay tuned. Stay with us. This is phenomenal. We'll be right back.
If you're looking for a reliable professional trucking and logistics service, you've come to the right place. Musa Trucking is a veteran-owned and operated premier transportation provider that can help with all of your trucking and logistics needs. Musa is revolutionizing the trucking industry through strategic partnerships, the development of core personnel, and the use of cutting-edge technology. Our inventory system ensures that cargo ends up divided into the right trucks and reaching the correct destination. Our drivers are dedicated to transporting goods efficiently and safely. Contact us today to get started by visiting the website on the screen or by calling 757-756-5246.
We are back to the Gentleman Style Podcast show, and we have Mr. Ryan Collison, venture capitalist, two-time startup, business owner. Notebook Capital is his firm that he's investing in Web3 technology and cryptocurrency space. He just broke down for us, if you missed it, he just broke down how he vets a venture capital and how he vets an investment and what you should consider doing prior to bringing him an investment deal, and how he's also talking about Web3 technology and investments. But Mr. Ryan, tell us a little bit more. Why does that interest you more than there's so many more technologies out there? Why does the crypto space in your investment portfolio excite you the most? Because you're all in. You're all in there.
There are a lot of other technologies. I think crypto has the most growth runway, over the next 3 to 5 years. There's a lot of other cool technologies, AI, machine learning. Not a lot of those are accessible to people. I mean, quite frankly, you need, to be an Andreessen Horowitz, a Peter Thiel, huge multi-million-dollar, initial seed rounds to even get those things off the ground. I like Web3 because it's more democratized. Anybody with an idea, they tell you this myth in America that like anybody with a good idea can go get funding and go to the bank, and like you couldn't be more wrong about that. The financial system's so screwed. I just look at all this different stuff. They call it like investor protection, but it really just is another tax and another barrier. And in Web3, that doesn't exist. You have an idea, you can code, or you got a buddy that can code, and you have the idea, like you can get on the internet and you can have a project up and running. And I just think that's the coolest thing. There's a lot of crypto, and like I said, I grew up in Baltimore. I had a lot of friends in the music business. I dabbled with investing in it myself. Another thing I would recommend avoiding entirely, unless that is your life's passion. But crypto reminds me a lot of the hip hop space in that way, in that, you and a friend can just get in and go. And, you don't need this whole apparatus. You don't need a laboratory. You don't need, a 10,000 square foot office. So the ideas just come, and, people are always coming out with new ideas. And for somebody as ADHD as I am, it's an exciting space that there's always something new to look at. There's always something new being, iterated. And, like I said earlier, a lot of my business journey is more about like creating cool stuff than it is about, like making and hoarding money. I've never done well in real estate where it's about those incremental 5% compounding growth. And I can like totally get that is good fiscal practice. It doesn't hold my attention. And if it doesn't hold my attention, then I'm not going to apply myself to it. Crypto absolutely holds my attention for better or worse, ever since I've kind of dived into it.
It's up and down. It's up and down. It's a constantly shifting and changing technology.
Yep.
That's true. That's true. What piece of advice, what goal, you shared a lot of nuggets today. What last bit of nugget would you give to that young entrepreneur out in the audience that you would say, listen, your back's against the wall, you're considering seeking venture capital, or you want to start your own business? What last golden nugget would you share to that young man, that young girl out in the audience that's just wanting to make a decision?
A couple of things. Don't ever be afraid to bet on yourself. Don't ever be afraid to take a chance. Even things I've done that I failed miserably at, like there was something that I learned in that carried over, that paid me later. Whether, it was a lesson, whether it was a skill set. Like I mentioned, failing miserably investing in the music business. But now from that, I know how social media works. So when I come to Web3, I understand what they're doing on Twitter, Instagram, and TikTok because I watch music artists do it. Another thing is, don't take the venture capital if you don't need to. Bet on yourself.
Don't take the money.
If you don't need to, look, I'm pretty easygoing and I'm a small firm, but a lot of these big firms, like they're going to get their money one way or another. And they're betting on 100 guys, they're not necessarily your friend. You know what I mean? They're there for them, for their purpose. And if you take the wrong deal, you're somebody else's commodity. You might have your own business and title, but you're working for them. Even me, like when I have investors, I have a fiduciary responsibility to those investors. And that means I can't always do what I want to do. A lot of deals, I'll just do my own money because like I know I'm going to behave recklessly. So like I can't ethically do that with somebody else's money. I can do that on my own. I can take risks and chances on my own. So if you really, really believe on yourself, at least get it further down the road. The further down the road you are, the more leverage you have. And the better deal you can drive. If you're coming from a position of weakness, like the investor's going to drive the conversation. If you're coming from, hey, I'm hot. I know I'm hot. I know this is going somewhere. Like this is your privilege to be in on my deal. It's like dating. When you're desperate, like they can smell that a mile away. When you're coming to the table and, your shirt's good and you're healthy and your skin's good, like they know that, you have something to offer, and that's attractive. And that's the same thing in building businesses and investing. Is like you always want to be attractive, and you always want to be attractive because you have an inner self-confidence.
Be bold.
What it is that you're doing. Yep.
Be bold. Go in there. Make a statement. Smell good. Yeah, I feel like I'm talking to Shark Tank. Like this is Shark Tank. Mr. Ryan is the shark. He's gonna be on the next episode of Shark Tank, y'all. That's huge. Huge. Mr. Ryan, sir, this is phenomenal. Thank you so much for taking time today to give these great nuggets, bro. Sir, how can we connect with you? How can we learn more? How can partner with you, grow with you, and learn more?
I'm on Twitter at Notebook Ryan. Telegram, the same thing. I think you put up the website earlier. It's notebook.capital. There's some contact information on the site. Reach out. Just let me know you saw the podcast, and we can chat.
Super dope. Connect, y'all. This man is huge. This is phenomenal. Mr. Ryan, I want to say this to you publicly, sir. Thank you for sharing your story today.
Thank you for having me.
Absolutely. I hope this has served you all. I hope this helps as well. I hope this helps you guys take your business, your startup to the next level, and consider, possibly selling one day and 10xing your capital to do bigger and better things, because that's how you change the world. I consider investors the people who shape the world of tomorrow, because you can put your money into the things that you want to see happen in the world. And Mr. Ryan is doing it with his company. I think that's huge. So like I always end every show, take care of your friends, take care of your family, and always take care of business. This is Marcus Norman of Gentleman Style Podcast Show, your favorite gentleman, and Mr. Ryan Collison of Notebook Capital. Check him out. Love you guys. Bye.